This is the Trading Psychology Podcast. This is VP, creator of No Nonsense Forex and author of the book No Nonsense Forex Trading Psychology. And with me, as he is every week, it is Robb Reinhold.
Hello, everybody. This is Robb Reinhold with Maverick Currencies, Maverick Trading, and as I announced just in this last week, I am the idiot who is running the Flat Earth Trading Society. So if you haven't gone ahead and checked this out yet, please do. I know VP has provided a link, and we're going to have that link down there for at least the next couple episodes. Real quick synopsis, I'm going to use random methods to pick random trades and employ very strict position management and position sizing methodology to see if you can truly pick trades at random and make a profit because you're really good at management. That's basically what the Flat Earth Trading Society is all about. And as I said in the video, this could be a disaster. It could end badly. I could be an embarrassment. I'm totally okay taking that risk because, as we've said in previous episodes, I love to fail. So let's go fail, or let's go succeed. We'll see together.
And speaking of, in the past, we've talked about missing trades. And a lot of what we did with that, a lot of what I did on No Nonsense Forex was simply just wag my finger at people and say, hey, this is something you definitely don't want to do. And the reason I was so adamant about it is because this was my Achilles heel for such a long time. I shouldn't even say Achilles heel. This was just my biggest weakness because I would always create reasons to clam up and say, okay, I'm afraid to take the next trade for, a series of reasons. And I think it's good that we not only revisit this, but we drill down into why this is happening. Because I think that's what's so great about this podcast is we identify the situation on different levels, not just what it is, but why it's happening, and then come back and talk about what we can do about it. So this was kind of an impromptu episode that Robb came up with that I'm really, really in favor of. And but we need to define some terms first, I think, Robb, before we move forward. So kind of explain what we mean by missing a trade, because it's not always so obvious. It's not always so black and white. And there's different ways to do this, and there's different reasons why we might be doing this as well. So let's go in that order.
I really love this topic because, number one, every single trader can identify with the topic of this episode. And number two, we make way too big of a deal about it. And so I really like that we're talking about it. And we've talked about these really deep episodes where we're getting into your brain and we're talking about the brain chemicals swirling around. And I love that this one's just, missing a trade. It's very, I don't want to say light. It's more light than, talking about how your brain works. But it's actually way more common. And this is going to plague every single person who has ever sat down to try to make a trade. This is something we all are going to feel and struggle with, and it can cause some problems. So as Patrick said, I really wanted to start off with defining missing a trade. Now just think about my life. I have been trading since 1997, and I've been able to do this full time through that entire time. And how many times do you think I have just sat and watched stocks or Forex or cryptos move up and down? Patrick, how many hours do you think I've spent watching this stuff?
Well, it's hard to say because you define yourself as an extrovert, so you want to be in the action. So you probably do it pound for pound less than other people, I would say. But I have a feeling this number is going to be really high despite that.
I have no idea what the number is, and I wish I had a running total of how many hours of CNBC I've had on the background that's just been white noise. But look, there's always stuff going on. And like in the currency market, how many non-farm payrolls reports have I traded over the past 20 years? And there's been moves up and moves down, and sometimes I've caught them and sometimes I haven't. And it's really a lot easier once you've had experience to not really worry about missing a trade because you understand there's randomness happening all over in every single market, all over the world at all the time. As a trader, to think that you're going to catch these trades, it's a fallacy and it's ridiculous. And it's setting yourself up for, I knew it. Now look, we all know that there's movements happening, but this is where it gets dangerous. When I say to someone like, hey, I think the dollar is going to have a really big move here over the next week, And guess what happens? The dollar has a big move over that week. And I say, I missed it. No, I didn't. All I said was said some words. I did no analysis. I did no running of risk rewards. I did no Fibonacci studies. I did nothing. For me to call that missing a trade is completely setting me up for disappointment, because now I'm like, oh, I'm always missing trades. Why can't I get these trades? I'm always missing them. So I really wanted to make a very clear, definitive statement of what is missing a trade and what isn't. And I'm going to use the term, very technical term, chickening out. Now, what I mean by that is that these movements happen all the time. And I have theories of, hey, I think Euro is going to underperform over the next couple weeks. Okay, unless I have sat down, analyzed the trade, ran numbers, chosen targets, chosen stops, chosen position management strategy, worked through my position sizing, that's not a trade. That's just me with some hot air coming out of my mouth. So if you have built your trade and you've gone through all of the things that your system says to do, and in the end, you chicken out, that is what is called missing a trade. Everything else is total BS. It's total bullshit that's just happening all the time that you can't catch. Patrick, do you have a better definition for that?
I don't have a better definition. I have one that's more appropriate for no-nonsense Forex traders. So you are going to miss trades as well, but the ones you should be missing would be something like, let's say the euro is just collapsing. And, we trade, or I trade 36 pairs. A lot of you trade 28 or 36, somewhere around there. And you just can't catch them all. You can't short every single euro pair out there, even though you might be getting signals for all that, because you're going to over leverage into one currency, which we never want to do. So you're going to miss those, and that's okay. That's just part of trading. There are going to be other trades I'm doing air quotes, miss because it runs past your signal, like it goes too far past the ATR. Those are ones you're technically supposed to miss. I think chickening out is a really good term, Rob, because there are situations where our system tells us it's time to go. It gives us, all green lights, 0 red, and that is your cue to go. But there's something that prevents you from hitting the button, because you are the final part of that system. The final part of your system is you actually executing the trade. And for some reason, that part has gone defective. And we need to explore, why is this happening? We've talked before in the episode when we talked about losing streaks. That you're just tired of losing, you don't want to lose anymore. Okay, well, that's one way. But there are other ways too. There's other reasons. And we need to attack those as well. And I think this is the perfect episode to do that.
So I think we've clearly defined is when your system says go and you don't go. Let's explore all the possible reasons why a trader would do all that work, build this system, get to the point where it's time to go, and they don't click the button. So first one I want to talk about is past trades. We've spent a lot of time in a lot of episodes going over the baggage that every trader is going to bring into their next trade. We've talked about going into the next trade with 5 losers in a row and all the psychological problems that brings with it. But then we've also talked about going into the next trade with 5 winners in a row and the psychological problems that come into this. So your past trades, what has happened in the recent past, and we've even done an episode called Recency Bias, is going to completely change your perception of this current trade. Even though your system gave you a green light, the past trades are working against you to try to get you to not make it, or to maybe be too zealous in making it. So past trades is one of the common reasons that people chicken out. Here's one that I find very curious, is that people set up either loss limits for like, I can only lose this much for the week. Some prop firms set up loss limits for, hey, you can only lose this much for the week. Some prop firms say, hey, you can only have a drawdown down to this point. All of a sudden, you see how it wasn't even about the trade. It was about where the account is at. All of a sudden, this trader is going to get a green light, says go, And they're going to be saying, yeah, but I'm right up next to my weekly loss limit. I don't want to blow this one because I want to keep trading for the week. It's only Tuesday. I've got lots of stuff to do for the rest of the week. I don't want to blow this. So again, any limits you put on an account of, hey, I can't go below this point, or I had a gain. Let's say you started out with 10 grand and you ran up to 11 and now you're back to 10 grand and you don't want to dip below. These are some of the things that could come and undermine you.
So I think we need to make a very important distinction here, though, Rob. There are loss limits we put on ourselves. So much drawdown that we don't want to go beyond because we might get past the point of no return to where it's really hard to recover that and get back to break even, or a certain point in drawdown to where we don't want our system to go past because then we know, okay, this probably isn't the system for me. And then there are loss limits that your company puts on you. All right. So given that, when is it okay to stop trading because you don't want to hit your loss limit, and when is it not? Because I would argue if these are just loss limits you put on yourself, then you need to just go ahead and trade and see what that system can do. And if it fails you, well then okay, you at least know, hey, I put a lot of work into this. I'm testing it in real time, but if it's not going to perform in real time, then I need to make some adjustments, or I need to scrap this thing altogether. To where if I am part of a prop firm and I'm working for a company, and especially something where I had to put some money forward to get into this thing, maybe freezing up and letting the month pass and then starting over again is just flat out good strategy. What do you think about that?
I'm going to answer this in two ways. First off, any reason that you don't take a trade or don't follow your system, any reason is a wrong reason. Now look, I said that saying, okay, I'm going to give a huge but after this. We have what you should do, and then we have real life. And I was just talking with you, Patrick, before this episode of, a lot of what we go into in this trading psychology podcast that is so different than everyone else is that we say, hey, this is what you should do. This is why you're going to want to do it. And we're going to talk about what to do when you can't do it. No one else really discussed that. And that's what makes this podcast different is, hey, for you overtraders out there, we're going to tell you not to overtrade. We're going to tell you why you do it. We're going to show you how bad it is for you. And guess what? We know you're going to keep doing it. So we're going to share with you ways to figure that out. This is in the same thing. So yes, any reason you do not take a trade is wrong if your system says go. However, we know that that is not really realistic. So I think you have to weigh everything out versus, okay, what's my overall goal here? My overall goal is to work for the next 5 to 10 years to become a professional trader. Does it make sense for you to sit out these next few weeks? Absolutely, 100%. I vote for that all the time, anytime. But let's say it's, hey, I'm scared and I need to, or I need to make rent this month or whatever. Then all of a sudden you really just need to weigh out your ultimate goal versus what's happening right here, right now. I know that's not a very definitive answer, but I think you have to take every situation one by one and weigh it against your overall goals.
Well, let's get it from your perspective, because as somebody who runs a prop firm, because I think you have such a unique perspective here that's you're not going to find anywhere else. If you have a trader that just keeps butting right up against their loss goals, not maybe every month, but often, and then they just stop because they don't want to get kicked out of the firm. Do you like that? Do you support that? Do you want that trader to stay on board if they just keep getting it handed to them over and over like that, but they still know exactly how to game the system to where they don't get fired? Or would you rather just see them play it out and see, maybe they can recover? Or, what are your feelings on a trader who approaches things this way?
That's a great question. And that's a very tough question because I'm going to say it again, it's situational. At Maverick, we're a little bit different. We don't just go by hard numbers. We go by, past performance. We go by the amount of risk the trader's taking. So we will make different decisions on different traders. Let's say I've got a trader that's consistently taking too much risk, consistently hitting their loss drawdown limits and then recovering miraculously. That person's going to get a call. That person's going to get a call. We're going to talk and we're going to say, hey, we need to see better behavior. And if we don't, we're probably going to ask you to leave. Let's say we see someone that's fairly conservative, had a couple months of profitability and is just struggling lately. Well, we get on the phone with that person. We say, hey, look, we have programs where we pair you up with other traders to help you out, to help you try to figure this out. And if we have confidence that they are going to be able to figure it out, make changes, make adjustments, then it's not a big deal. We aren't going to be really hardcore about it. We're going to say, hey, what can we do to work with you? Now, ultimately, we do have to make a decision, even with those traders, where if after 6 months, 1 year, we've sunk a bunch of resources into the trader and they're still making the same mistakes, then at some point we do have to make the hard decision. But it really is situational. It really is.
All right. Well, while we're on the subject, then let's take it the other way. You're like a lot of prop firms to where you have different levels, different milestones you can accomplish, and then once you do that, you're allowed more money to trade. I'm not going to say out loud if I've done this or not. I think almost everybody's done this before, and you can attest to this. But let's say that I'm trading really well, and I know that before the period is over, I have already approached that next threshold with my earnings. And I don't want to dip below that, because if I do, well, then, I don't get more money to trade with and I have to wait till the next period. So, what do you think about a prop firm trader that gets beyond that threshold, gets to that next level, and then just decides, okay, I'm going to stop. I don't want to risk dropping below this. I'm going to shut it down and take my earnings and move on to the next level, because this is what I'm here to do, right? It is totally gaming the system. It's not staying true to your own trading system, but it is a job, and I'm trying to move up in my job. I know what we think of this. What do you think of this on the other side? I've always been curious about that.
All right, this is actually a really funny thing, because what you're talking about is someone who is gaming the system for their benefit. And whenever I have a trader that I see doing this, and whenever I talk to them, they always are very like they feel like they're in trouble. And for me, I'm always like, look, if you aren't trying to game the system, you're not really trying to win, are you? I expect my traders to do things that are going to be the best thing for them. That's why I hired them, because I trust them to be smart. And smart people figure out ways to game the system. So look, I actually love it, and I will actually sometimes have to instruct my traders how to game our system. And they're like, why would you be telling me this? I'm like, you should already be working on this. So look, me personally, Maverick, we don't really care. Obviously, there's going to be some times where it's just so egregious that maybe we'll reach out. But I wanted to broaden this out, because we just talked about how your loss limits, and not just your loss limits, but like, hey, I've already lost $500 this week, or oh my gosh, I'm down $1,000 this month, how those are going to cause you to chicken out. I want to go all the way and open this up to the other side, not just with the prop firm, but let's say that you've had a killer month. Let's say your month is up 10% and you say, oh my gosh, I've never had a double-digit month. If I take another trade, it's the 28th of the month, I might not have this double-digit gain in a month, and I really want to hold on to that. So all of a sudden, you can see that this happens on the other side. A prop trader not wanting to take a trade in the last week of the month so they can stay over their high water mark. A trader saying, oh my gosh, I made 10K this month. I've never had a 5-figure month before. I'm not going to take any trades. So it happens on the other side. There's things on gains and again, goals that you set that are also going to cause you to chicken out. And I'm going to go back to what I said. I think you have to weigh out the current situation versus your overall goals, and that's going to help you make the decision. For example, if you are a prop trader and you have now gone up above your high water mark, you're going to get a major capital advance at the end of the week if you just don't trade anymore this week. Your overall goal is to be trading a 7-figure account. That fits within your ultimate goals to be able to get there. So again, it's very situational. I wish I could give specifics, but I just can't here. But I think if your overall goal is bigger than the current situation, then it makes sense. Other than that, you got to keep swinging.
All right, so I have some pretty strong thoughts on what you just said, but I want to ask one question real quick because this has been weighing on my mind. And not that you would know this or really pay attention to this, but just a rough estimate. Percentage-wise, how many of your traders who have advanced, so let's just take that group, who have advanced up at least one level, are guilty of doing what we just talked about?
80%. And look, I don't even want to use the term guilty. I applaud it. I want traders that are smart enough to look at the rules and be like, hey, if I do this on Tuesday and this on Thursday, I can game the system. I want that. And look, I better be smart enough to close loopholes that are disadvantageous to me. They should want that out of me to be smart enough to say, oh, that's not a good thing. Let me close that up. So I hold nothing against traders who try to game the system as long as it's in their long-term benefit. If they're going to do something that's short-term, only going to help them short-term but hurt them long-term, like let's say that I made it very clear to traders at Maverick that if you do this, you will be let go. And they say, well, I need to make it this month because I want my level of my business this month, but put at risk being let go from a firm that's going to back them with 7 figures. That's the wrong decision. That doesn't fit within your overall goals. So hopefully that answered it.
No, for sure. And I don't feel so bad now. But yes, it's just one of those things. We've never talked about it. But what you said before about somebody who is not in a prop firm, but they hit that first 10% month, which is really anomalous, by the way. That should be something that piques your interest a little bit, or maybe you hit over 10K in profit for the month, and then just stopping for that reason. I'm like over here, like almost vomiting in my own mouth when you say that, because that is such a useless vanity metric to me. I don't know why we celebrate arbitrary numbers like that. I think that is one of the silliest reasons ever to stop trading and not go forward, because don't you want to see what your system is capable of doing if you see it all the way through? Is it really capable of a 10K month, or are you just gaming your own little system to make it look that way? It to me, doing something like that is focusing way too much on the optics and not too much on what's really there. Do you have similar thoughts on that, or do you have a different take?
No, I am so 100% in agreement with you. And I want everyone to go back to our episode we did on dealing with slumps. And I went through all the ways to deal with slumps. And one of the things I said is make sure that your system is not just in the wrong market environment. So if you're a trend following system and you're in a trendless market, that could be one of the reasons for your slump. But then when you become in a very strong trending environment, all of a sudden your system kicks ass and you're just killing it. Here is the reality of the situation. When you have an above average month, you're not smarter, you're not working harder. What's happening is your system that's been, kind of floating around, and some of the market environments have been good for it, some have been bad. All of a sudden, 1 month out of every 18 months or 12 months, your system is fully aligned with market direction and volatility, and it's going to stay that way till it ends. You put in so much work trading through the shitty market environments where you struggled, and you fought through all of that. And right when it was getting good, you quit because you have a couple of dollars in your pocket. No, you had to fight through 10 months out of the year to get 2 that are perfect for your system. Those are the moments you have to squeeze it for as much as it's got. Keep going. Look, at some point it's going to end, but you traded through all the shitty periods of the year to get that point. Don't quit. Keep going.
Yeah, it's just when you were saying that, I was getting shades of people who sell signal services. which some of them do it legit, but some of them, you know as well as I do, they'll catch lightning in a bottle twice in a row, stop with 3 weeks left to go in the month, and then tell everybody, hey, look what I'm able to do in 1 month. Well, no, that's not realistic at all. So yeah, it's for some reason, yeah, that whole conversation just made my stomach turn for a minute. I'm glad we kind of hashed that out. So all right, well, before we transition into ways to fix this, ways to overcome this, let's kind of give a little scoreboard wrap up here, Rob. What are the reasons that it would be okay to miss trades, and what are the reasons it would absolutely not be okay to miss trades? Let's kind of black and white this thing out before we move on to the actual solution.
Okay, I think that is a very good thing to do. And I'm going to make this just very binary. I'm just going to say when it's okay, and then everything else means it's not okay. I think when the bigger goal of waiting and missing it outweighs the current situation, I think it's okay. When you say, I'm going to hold off on this trade because whatever is over here is greater than whatever is over here. I'm going to get a $20,000 capital raise, and I'm looking to try to make a couple $100 here. It all of a sudden, this is a bigger goal. I'm going to go after this goal. So I think that is the only line I can draw, that if there's anything that's a bigger goal for you than this one trade, okay, I could see putting it on the back burner and just missing that one. Anything else, anything that happened in the past, anything about your account value that's not tied to some big reward, I think it's wrong. I think you've got to keep swinging.
Okay, good. Yeah, I'll co-sign on that. And to put a little finer point on it as far as my outlook goes, yeah, vanity metrics are not a good reason at all. So that's not acceptable. But as we alluded to before, if you miss out on a few trades because you don't want to over leverage into one currency, that's just smart. That's just you not allowing external forces to determine what your bottom line is going to be at the end of the month, end of the year, whatever the case is. And I'm very much in support of that. But yeah, apart from those anomalous situations, I like where your line is. I think that's a very appropriate line that everybody can kind of see and we can all agree on. So now that we've done that, good. Let's go ahead and move on to the solutions part, which we always try to do. We have to identify things first before we can fix it. So I feel like we've done a pretty good job of that. Now, Rob, I'll kind of defer to you to kick this off. What are some ways we can make sure that we don't miss trades in the future? Because this was always, I think the reason why I've always been so adamant about this is this is my one biggest weakness, is I would find ways to miss trades that I shouldn't be missing out on. But again, I never provided much of a solution except for, hey, just don't do it. Just keep trading, which is the right answer, but I think we can do better, right? And I think this is the point in the podcast where we do that. So go ahead and start us off.
There are a lot of things we can do to prepare us for every single trade, and we've talked about them, meditation, all this stuff. But until you chicken out, you can't really do a deep dive into why you chickened out. So yes, we can be aware of all these things at first, but what I want you to be super vigilant on, really for the next 6 months, I want you to really be watching for this and really be very diligent and writing in your journal about this. There's probably going to be a trade somewhere in the next 6 months that you do chicken out. I want you to be aware of that and think about it. In the next 6 months, if you identify, I just hesitated there, I just missed a trade, now it comes into work. You have to be self-aware enough to realize, oh my gosh, my signal said go and I didn't go. Now you can start to go to work. And this is the hardest part about trading. The easiest part is learning about charting and technical analysis. This right here of, I just missed a trade. Why? And this is where you've got to go deep inside yourself, be self-aware and reflective and say, okay, why did I miss that trade? You know what? I've had a 25% win-loss over my last 7 trades. Okay, there we go. You've identified it. You've identified, okay, why did I miss the trade? Next, you can go through all the things we've been talking about. Okay, what can I do to actually get better. We've talked about things, again, meditation, walks and exercise, shutting your system down, lots of things. I even told you a story about a guy who burns up his order ticket. He writes down his trade on a piece of paper, and when it's done, he burns the paper. Very dramatic, but it's really to clear that out so they can get to where, okay, I'm making each trade independent of whatever happened to the last one. Are you near a loss limit? And then you have to really make a determination of, okay, what is my greater goal? What is my greater goal? Does it make sense for me to stop here? Now, do you see how this wasn't even about this trade? This is more about where am I going in my life? What do I need to do for the next 3 to 6 months? It's a much bigger goal. Are you up near a gain limit? Are you up near a certain percentage that you wanted to hit? And you're going to feel good at the end of the month if you maintain that. The biggest thing is to be aware. Be aware. That's it. Be aware. And when it happens to you, because it will happen to you, if you're fairly new at this will happen to you in the next 6 months. Figure out, why did I do it? And the great thing is about the brain, when you go through that process, you are rewiring your brain. So the next time this happens, you're going to have to do much less work. And you do it 2 or 3 more times, you won't have to do any work at all. It'll be automatic. So again, just to recognize it when it happens, and then go to a deep dive of why it happened, and then think about the things you can do to make it not happen again. That's the process. Every trader has to go through this process thousands of times in their life.
And let me add something too that I think is really important, because I feel like this is what most people do, and we've alluded to that. We've alluded to it here already, but instead of living in the past and focusing on what has happened up until this point, think about the present and think about the future, and do it logically, right? The way No Nonsense Forex approaches trades and the way Maverick Trading approaches trades, we both have one pretty big thing in common, and that is, if you take a loss, it can only hurt you so much. It's one trade. We're so afraid in this moment of taking another loss. It's just one loss, right? You know what's worse than taking a loss? Trading a system that is not giving you the results it is supposed to give you. So getting an incorrect readout month after month, year after year of this system you put together. When you miss trades on purpose like this, you run the risk of getting an inaccurate readout of what this system can actually do. And you want to know in real time what this system can actually do, because you might be using it for the next 3, 5, 10 years. You want that number to be accurate, right? If this system is showing better results than what it actually gives you in real life, that's not good, because now you run the risk of having the performance numbers for your system at the end of the year being not real, being fabricated in a way. And how does that help you going forward? It doesn't. You got to understand, you might have to sacrifice results early on for the greater good of the future of the system you're trading. I want the most accurate numbers in real time, humanly possible, on my system, because this is what's going to get me through the next 3, 5, 10 years of my trading life. I don't want these numbers to be off. And by chickening out, I really run the risk of that happening. So I'm thinking way too short term and absolutely not long term enough. And really, when it comes down to it, the long term is so much more important than chickening out and possibly avoiding a whopping 1 extra loss. I just, when I take a 500-foot view of it, I just can't wrap my head around the logic of that.
Trading a lie sounds like the biggest waste of someone's lifetime I've ever heard. Patrick, you are so right. You want accurate numbers. You don't want bullshit numbers that don't hold up in the light of day. That's a waste. Oh my gosh, you are wasting so much of your precious time in life. Don't do it. Go for accuracy. And let me follow what you said. You said, again, the worst thing to take a loss is to create a system that's a lie. I was thinking in my head, for me, the Worse than taking a loss is missing a monster gain because I chickened out. I will take a preset loss any day of the week just so I don't miss the monster gain that I know is coming somewhere in the future. I will keep clicking the buttons because I know that monster gain is there because I trade that way and I've got the data behind it. So I don't want to miss trades because I know that somewhere in my next 10, 15, 20 trades, I've got a monster in there and I've got to follow every single signal. So I think helping yourself look at it that way, that, hey, there is a good trade coming up. If you don't click the button, you are going to miss it and you will kick yourself more for that than you will for your $50, $100 loss all day long. That was going to drive you crazy. So I think you have to really think about, hey, I've got to keep clicking these buttons because somewhere in my next 10 trades, there's a big gain in there. And I want to go back to one of the things we talked about in our hesitation podcast that I think is very, very important. And I want to remind everyone about this. And we do this with all of our traders at Maverick. You need to trade in blocks. You cannot make singular trades in your brain. Meaning, oh, I'm going to go long pound yen. Okay, that's great. Who cares? I'm making 25 trades and I'm going to have positive numbers on these 25 trades. That helps get over this problem of missing a trade because you don't care about you don't care about trade number 11. Who cares about it? You care about the group of 25 trades that you're going to analyze and make some changes on or whatever you do with it.
Yeah, what you just said made me mad because I couldn't articulate that the way I wanted to. And trading a lie is perfect because that is going to scar you going forward so much. And for what? For one trade, you said it. The way we do our trades here, losses only hurt so much, but wins can go on eternally. The way we set our systems up, it's great that way. So why would you miss out on that? And I have missed out on so many huge trades because in my dumb head, I rationalized sitting out this one time because I was scared of whatever. A lot of the things we talked about in this podcast already. That it for some reason, I'm like, God, almost every single time I do this, I miss out on a trade that would have wiped out all of my previous losses. And I wouldn't even have these concerns anymore if I had just bucked up and went forward. And I think your solution's perfect too. It's something we've already talked about that I've never came up with myself. That's why I'm so mad when you come up with it. I shouldn't be, but I'm just like, God, how different and how much would my curve be even higher had I just thought about this before? Trading in blocks is perfect because it prevents you from trading individual trades. Instead of trading one, you're trading, 20, 25, like we talked about before. Perfect. Because I just can't express this enough, how toxic and how overall harmful this mindset of justifying skipping out on a trade is. So I really think that is a perfect solution. Do you have any other solutions on top of that one that we can go over while we're here?
Anything you can do to avoid this singular trading mindset is only going to help you psychology. Anything you can do to get rid of that singular trading mindset, you have to do it because that singular trading mindset to where you're just looking at the current trade you're in causes so many issues. I've told this story before. I'm going to tell it again because it needs to be told over and over again. When I was a new trader, if you asked me, Rob, do you think you can make money on every single trade? I'd say, no, of course not. That's stupid. No one would believe that. Of course you can. You're going to win some, you're going to lose some. You just want to win more than you lose. Okay, great. What about the trade you're in right now, Rob? Do you think you're going to make money on it? Oh yeah, definitely. This one's a winner. I've done everything right on this one. Do you see how absolutely ridiculous that is? You can't be like I used to be back in the day where, of course, you can't win them all, but every single trade, I truly was convinced I was going to win it. The only reason I clicked the button was because I was totally convinced I was going to win it. If I wasn't totally convinced, I didn't click the button. And I set myself up for all these failures. And then I'm like, okay, what if this one doesn't go well? Like, I'm a little doubtful about this one. All the signals tell me to go, but I'm doubtful, so I'm not going to take it. Boom. Big winner. Because I'm not looking at these in a group. I'm looking at them as singular outcomes. So trade in blocks. Keep telling yourself that story about me. Do you think you're going to win them all? No way. What about the one you're in right now? Absolutely 100%. Get rid of that mindset, and it's going to help a lot of the psychological problems you have in trading.
And to add on to that, allowing your system to give you accurate results instead of trading a lie and giving yourself inaccurate results is so much more important. Finding out and getting to the bottom of this question is so much more important than taking one extra loss. I don't know why we're so scared of that, but we really are. And we're sacrificing our future for this. And it's not okay. If your system is not right for you, you need to find this out. It's going to hurt and it's going to suck and it's going to feel like you wasted all this time. But there's only one way to know. And you can't trade a lie, because now you're mortgaging your future for something that's not even real. Because the real reason at the end of the day was you were simply scared. And you can't trade scared. Because when you back tested this wonderful system you put together, it didn't trade scared. It didn't care about the results. It just traded. And that's exactly what you have to do too.
Amen, Patrick. And I'm looking at the time here on this podcast. Remember how we said it's going to be nice to do a short podcast? This is something that, again, I started this off with saying this is such a small little thing. And we've talked about these huge issues about how your brain works. And now we're just talking about this little missing a trade. And I think we could probably go on for another 30 minutes and really not rehash things, because it's such a huge thing in your brain and it's such a little concept. I'm surprised because I thought, oh, we'd be able to get this done earlier. But this is a really, really profound, deep thing that every trader is going to deal with. And you have to just be on guard about this. Just swing the bat, follow your system, and see where it goes. If you don't have the results you want, go back in, tinker with it, adjust things, and get it to where you're happy with it. Don't cheat the system. Don't lie to yourself. It's never going to work out for you long term in the end.
And yeah, I kind of knew that this had the potential to run long, because this has really been the one thing that has plagued me, the one individual thing that has plagued me more than anything else. It's plagued me psychologically. It's hurt my bottom line more than anything else. So yeah, I really have strong feelings about this. And you're right, we could go on even further. But I hope we've done a good job of identifying these problems further, talking about certain situations where you might miss trades that we did not talk about before. And then even though some of the solutions were things you've heard before, at least attaching those solutions to this particular problem is something that I hope we were able to accomplish. Because like you said, Rob, yes, I will bet this affects every single person listening to this podcast. And now you have a place to go. You know, if you're struggling with this, if you're at a crossroads, whether you should be chickening out or not, you know, now you have a blueprint to follow. So do you have anything else, Rob, before we wrap this up?
Just one last thing, and it's just going to be a reiteration of something I said. Somewhere in the next month, 2 months, 6 months, you are going to chicken out. I need you to have a red light go off and sirens in your brain say, oh my gosh, it happened. It just happened. Because if you don't recognize it, the opportunity to fix it is going to slide on by. So I need you to be vigilant and being like, oh my gosh, Rob said it was going to happen. Here it is. I did it. This is when you go in, do the deep dive, figure it out, rewire some of your brain, because this is the only time that you can actually make some changes, when you're going to be receptive to it. So be vigilant over the next couple months. When it happens, I want you to jump on it and get excited that, yes, I finally get to rewire some of my past behavior to do this different in the future. Be excited for it, be watching for it, and when it happens, jump all over it and make a long-term change.
And let me apologize to my traders. This is something I should have brought up 4 years ago on my channel. But I didn't, and this could be a pretty crucial thing to miss out on, because this is something I did, but I didn't articulate it on my own channel and on the blog. When you journal, you need to be journaling these missed trades as well, because this is, like I said, this is the biggest mistake I would make over and over again. And if I don't journal it, then I'm not aware of it, And if I'm not aware of it, I can't cut down on it. And I can't watch myself cut down on it over the years. So you don't just need to be journaling the trades you took. You need to be journaling the trades you purposely missed out on. And then in that all so crucial comment section, talk about why. Now, again, if you need to refer back to episode 33, allow that to be something that helps you put something in that comment section if you can't articulate it yourself. But that's one thing I really want to leave everybody with is if you haven't been doing it already, make sure you're also journaling those trades that you purposely missed out on for the reasons we talked about today.
Patrick, that is such a great idea. And one of the things I do with the traders I work with is I have them say, okay, I want you to take all the trades you made over the last 6 months. And look, we do options trading at Maverick Trading. We do currencies and crypto at Maverick FX. So this is people who are options traders. And a lot of our options trades, we say we want you to let them run out to the end. Run it all the way out to the end. Don't exit early. Run it out to the end. And one of the things I have traders do that are struggling, I say, I want you to go back in your journal and pretend like you didn't exit any of the trades. You just let them run out to the end. I want you to run your numbers, your win-loss, profit factor, P&L, on if you didn't do it, and come back and tell me if you still want to keep doing what you're doing. And there's only been one time in all the years I've done this where someone came back with better results of not following their system. I love this idea of journaling the trades you missed. Put those trades in there. Run your numbers. This is the best way for me to get my traders to change their mind about how something is to have them work through the numbers and see how much money they were leaving on the table. Go through that, run the numbers and say, oh my gosh, I am costing myself so much, and it's much easier to stop the behavior if you actually see the numbers. So I love your suggestion for everyone to journal missed trades. I think it's a great idea.
But thank you everybody for listening to what we thought was going to be a 12-minute episode. Turned out to probably be the longest episode we have done to date, but I hope you got a lot out of it. And we will hit the reset button for episode 34, and we will see you next week.